Money never sleeps, pal.
Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. Owen Fitzgerald and I are back with another Money Talk segment this week with the shiny new $24 billion valuation for American neobank Chime. Then we take a dive into Ron Shevlin's concept of deposit displacement through the lens of Bank of America, before exploring how Facebook's relaunch of their digital currency project might intersect with Amazon's hiring of a crypto lead. And then finishing with a quick look at Lending Club and also a sampling of Lex Sokolin's poetic fintech prose, all right here on Money Never Sleeps. Hey Owen, how you doing?
Hi Pete, how are you?
Good. I got a surprise for you.
Go for it.
So I get access to the stats on Spotify now for our listeners, which is great.
Okay.
And one thing that they put in recently that I wasn't aware of is artists they're listening to. So we see who our listeners are listening to on Spotify besides us.
Excellent.
And not just other podcasts. We don't see the other podcasts, but we see the artists. So you're going to like number 2. Number 1, Kanye West.
Love it.
Number 2, Eminem.
Okay.
Number 3, the Beatles. Like, what?
Okay. Maybe
Everyone
it's an age
listens
thing.
to the Beatles, I guess. The demographic, the highest demographic is 29% age 35 to 44. So, okay, maybe.
Okay.
And then The Weeknd, and then Linkin Park. And that is quite a diverse musical experience
That's
there.
pretty
which
broad, all right.
hopefully reflects the diversity of the topics we cover.
Love it.
Not. But we do our best. We do our best.
That's it.
I know.
That's cool.
I know. But it has been a slow couple of weeks from a news cycle. Again, I was off last week, and again, I was deleting everything. I think the only one thing that happened last week that I didn't pick up on that you did because you were looking at the news and I was not, while I was trying to spend as much time as I could with the kids, was Chime doing their big raise.
Yep.
So starting off that one tonight, Chime raises $750 million, earns a big jump in valuation as another fintech moves closer to IPO. This was in CNBC, obviously, and a bunch of other news outlets picked that up as well.
Yep.
On the 13th of August, they're now valued at $24 billion. Their round was led by a new investor, surprise, surprise, Sequoia Capital. They're in everywhere these days. Joined by SoftBank, also new, but again, no big surprise there. And their current investors, General Atlantic, Tiger Global, and Dragoneer Investment Group. Really cool name. We talked about them before because they invested in Brex's Series D in April.
Oh, yeah.
They're doing about a deal a week now as well. So again, say it with me, gross tonnage of dollars, right? So Chamath Palihapitiya, who is the king of SPACs, who made that comment on the All In podcast and said, listen, this is just a story that we're seeing again and again and again, the late stage private equity firms coming in with maximum amount of dollars to 5 to 10x their investment when these companies go public. So not too surprised. Obviously, IPO rumored for the first half of 2022. They hit EBITDA profitability last year. So taking a look at Chime, some of their differentiators for now, right? Because we haven't talked about them all that much. We've mentioned them, but today was the first time I've had a real serious look at what they do and how they do it. So obviously Chime are a neobank in the US, but they're not really a bank because they rely on Stride Bank as well as Bancorp Bank, who are one of the OGs in banking as a service, to deliver what they deliver, which is a checking account. And I'm still amazed they call them checking accounts in the US, but I don't think we'll ever get away from that because these accounts don't actually give you a checkbook because you don't need them.
Yep.
And so they do up to $200 fee-free overdraft, 2 days get paid early. They do a secured credit card to help you build credit history. And that's about it, right? So these guys are doing well, they're profitable, and they're going to go to IPO. They need another $750 million. So let's pile in. Is that it?
Seems to be. I mean, like the reason I wanted to chat about it, I suppose, is because comparisons to Revolut and Sterling, who we're always talking about, but particularly Revolut, because even I think it was this week or last week, maybe Revolut announced their salary advance product that they're going to start to offer in the UK, which will be coming to Ireland soon. And again, it's the opportunity to get your salary 2 days early, you know. But like we're talking about, what do they have customer wise? 20 million. Their Cornerstone Advisors had them at about 20 million going by a July 2021 study.
Okay,
customers.
that's good.
So double the size of Revolut, but lower valuation. Because I think we had Revolut at 33 billion on the last round.
They were at 33 billion on the last round, 950 million I think they raised. Not close to that. You know, so Chime are at 24 billion.
Yeah, with double the customers. An interesting one actually, because I was looking at it, and I mean, look, it's a US neobank. Fair enough. It's one that's reasonably well known. Obviously, it's a large customer base in the US. I suppose what's interesting about it was actually the kind of split of the customers. Nearly 70% of their customers are 40 years or younger, which is fair enough. That's the typical age bracket for neobanks. A third of their customers are Black or African American. So they're about 11% of the US population. So they're doing pretty well in that category. The interesting one was that there are a couple of really interesting points. The average income of a Chime customer is 39K versus what would be 63K for the average American. And nearly 2/3 of their customers earn less than 35K altogether. And then only 16% or less have a college degree. 1 in 5 Chime customers are unemployed. And among Chime customers, 57% would categorize their financial health as dire or struggling. So this was a really interesting article by Ron Shevlin, in Forbes, and he was going through it, talking about the valuation. Is it really worth that much? And like we've talked about the valuation all the time, and obviously it's worth what someone's putting into it. But I suppose the bigger question was, with a customer base, like the more interesting bit was a customer base like that, 1 in 5 unemployed, low income, can you really scale on the back of that? Because the obvious thing is, they'll start to expand into other customer segments, but like maybe they won't. But can you really diversify your product offering then to those types of customers?
Well, if you look at the product feature headlines, the secured credit card with Credit Builder to build your credit history, that's a play to those with lower incomes.
The needs of that audience, yeah. Same with the salary advance.
And they don't have a wealth product, right? So focusing more on lending than on saving, which is what you do if your demographic that you're serving is lower income. Now, you can look at that 39K in average salary compared to the 69K that you were mentioning and say, well, the age group being 40 or younger, well, there are naturally lower earners. The younger you are, generally, the less you earn. But that being said, there are plenty of high earners in the 30 to 40-year-old category. So it's interesting to think about what would draw a user to Chime. What is the initial hook? What is the initial pitch to get them in? Because I've not been in the US market for 20 years, and you've obviously never been there. It'd be an interesting thing to ask one of our friends in the US, like, what is the hook? Because I was trying to look at Chime compared to some of the other US neobanks that we'll talk about in a minute. There was nothing there that said to me, other than this Credit Builder product, that I'm going to have a special unique offer for a certain demographic.
Yeah. And look, it seems to be, going with the numbers, it seems to be that their hook ultimately was that they're targeting the lower to middle income.
Okay, there we go.
Which is fine, except there's more players coming out that we wouldn't even be familiar with that are targeting. I know there's a neobank aimed at purely at the African American community. I think it might be Vero, is it? Or there was one announced recently, but they're all going to start fighting in that area. And then the other really interesting one, because we've talked about it before, is Walmart. Low to middle income consumers is Walmart's bread and butter. Yeah, we talked. I can't remember. It was like 30 million customers a week or something going through a Walmart, and we talked about this kind of super app that they're trying to build, offering financial services as well. You'd have to assume that if they could roll out financial products and others as part of their offering, that they'd mop up a lot of these types of customers.
They would, and on a related note, they are looking for a crypto product lead. So we're going to talk about this a little bit later on, but in terms of the transformation of your whole payment mechanism. Right. And what cryptocurrencies can do for that, whether that's, mainstream crypto like, Bitcoin or ETH, or it's actually stable coins. It's a different conversation. But I'm thinking of Chime almost along the lines of a Monzo. Yeah.
It has customers who like it.
Exactly.
Yeah.
Exactly.
But we talked about with Monzo, is someone going to buy them because they don't have enough to offer to set themselves apart? The difference here might be that like Chime's after raising 750 million. Maybe their route now, their strategy has to be acquisitions.
Acquisitions or be acquired.
Make acquisitions.
Yeah. And it's going to be, looking at your customer base, what is something that fits on top of that nicely? Or what is because they're clearly B2C, but is there a B2B element there that is interesting?
We talked about with Revolution, when their kind of travel agency role that they went down. Is there a side business of some kind? What were you going to say there? Something in the auto space?
No, it's something in the B2B service for small lenders.
Yeah.
Right. And almost start thinking about this in the same way that Square with their BNPL, uniting their building that bridge between the B2B and the B2C. And, could a Chime do that with acquiring a number of small lenders, right? that have relationships and where you can package up that debt and you can sell it off, you can securitize it.
The kind of credit unions or something like that, or what would be the equivalent of a credit union here?
Yeah,
Yeah.
exactly.
Especially it'd be interesting if they get to IPO, like, you know, targeting end of next year. You'd have to wonder what's going to change, especially with, like you mentioned, Square. We're talking about Walmart, some of the other banks that are coming out. Like, all the signs are positive for them at the moment, but what'll it be like in a year's time for them?
Yeah, well, I know when Slack went public, it was only a couple years after that where Salesforce came in and acquired them, right?
Yep.
So if you can get yourself into the public markets and there's that transparency there on your business, then does that make you a more suitable acquisition target?
Yep.
Likely, yes. So, we'll see.
Cool.
Along those same lines, you mentioned our friend Ron Shevlin, and I think he was the guy that I was struggling to identify. And the term that he had been using, which I picked up on a couple of years ago, I think, for what neobanks are doing to big banks in the US, which is called deposit displacement, right?
Okay.
So he was the guy. And thanks to Brian Claggett from Movin', shout out to Brian, great guy. Did the Finsight series with him and Rory Galvin and a few other guys a couple months ago. We put that out as an episode last week. And he was the one who refreshed my memory when I was talking to him during the Finsight series. So thank you, Brian. Ron Shevlin also wrote an article on the 16th of August. I did see that one that he did on Forbes today, but I didn't get into it because I'm outside of the paywall. And where Bank of America is losing its grip on millennials as fintechs reinvent the checking account. Like I said, I just still smirk when I see checking account. I think current account makes so much more sense. When I first stepped foot into a bank in Ireland in 1994 in Galway, I'm like, what the hell's a current account, right?
Yep.
But now I know, and the word makes a lot more sense, and I like it. There's even a bank, obviously a neobank in the US called Current, right? So they're onto something. Anywho, so this was, again, like I said, Ron Shevlin in Forbes on the 16th of August, where he's looking at Bank of America and how over the last 9 months, the number of accounts that they have lost and where they have lost them to, and doing some estimations there. Not only a Bank of America been losing, but Wells Fargo, community banks, and credit unions are all losing out too. Interestingly enough, Chime actually lost ground.
Yeah.
So, and this is the specific context they were looking at is those that were referring to neobanks as primary accounts, or what type of bank they were identifying as their primary account, the consumers were. And that was whether it was a big traditional bank or it was a neobank. So obviously the demographics they were looking at were Gen Z, millennials, Gen X, all shifting their primary accounts. Interesting point that somebody brought up is that with this whole idea of deposit displacement that Ron Shevlin coined, dare I say, it doesn't matter for now, which is the big thing. Okay, because Roy Galvin on the Finsight series pointed out that baby boomers, that generation holds the majority of wealth. The majority of baby boomers will still have their accounts with the old traditional banks. That wealth is still growing, okay? Over time, that is going to be depleted. And at that point, that is where the leaky ship, that Titanic, the back end of it is starting to toss upwards, right? And this whole idea of deposit displacement with Generation Z, with millennials, with Gen X, moving away from the big banks. As of right now, it's not killing the big banks.
No.
Because the funds that are being drawn away aren't enough of a dent in their side, and they're okay with it for now, I think. But as I've seen with big investment funds like active mutual funds that are being run by old school asset managers, where they've seen for years no new net growth coming because of leakages to ETFs, to exchange traded funds, to passive funds. But the markets continue to go up. They have older school investors that are staying with them, and they're not feeling the dent. Are they missing out on big growth? Absolutely. And the big banks in the US are missing out on the big growth, but they're making up for it in other areas is what I'm trying to say in a roundabout way. The winners were PayPal, which was really interesting. Current, as I mentioned, Dave, and Square Cash. And I think if you look at all of them, PayPal, someone identifying PayPal as their primary checking account, that's pretty damn cool.
That's an interesting one, yeah.
But if you think about it, if you're depositing your paycheck into PayPal and you're going to buy stuff online, it's a heck of a lot easier than, putting in your credit card details again. So many apps are saving your credit card details these days. It's not that big of a deal, but you still got to put in that CVV code. If you pay with PayPal, it's boom. It's so easy, right?
Even just the mindset there that someone would think to get their salary paid to their PayPal account. Crazy.
Why not?
Yeah. No,
I
no, I know.
mean,
It's just, you just, like if you were to say, who did I think would be the winners in that space, I wouldn't have put them anywhere near it.
I know. I was surprised to see that, but when I thought about the reason why, because of the convenience of it and the view of someone in their 20s as to a level of trust that they may have for a financial institution or a financial
Yeah.
services provider, that definition of trust is different from someone in their, late 30s or 40s. So,
But also, I think, and we touched on it when we talked about Square the last time, I'm thinking of it on the basis that someone's getting their salary paid there.
yeah,
It's more than likely the person who's using their PayPal account to generate their income is probably working for themselves, creating something, because PayPal is a really efficient way to be paid online.
perhaps.
So more a creator, or an influencer, or even just someone working for themselves. And when we talked about Square a few weeks ago and the buy now, pay later piece, it was about that ecosystem and about ultimately connecting businesses with their customers all within. And that's what we thought Revolut would try to do, and a few others, so that's probably what is happening there with PayPal.
Okay, that's interesting. Is that, individuals, creator economy, gig economy, people just getting paid into PayPal.
Yeah, it's not me drawing down my government salary and putting it into PayPal, which would seem bizarre, and I'm not sure my employer would sign up to pay me into my PayPal account.
Yeah, but this is Ireland, buddy.
Yeah, well, that's true.
Yeah, I mean, I could, if I was employed in the US, I could elect to have my paycheck paid into TransferWise.
Yeah.
Right? Because that has an ABA routing number.
Yeah.
And there is a bank account at Community Federal Savings Bank in New York is what TransferWise, or Wise now as it's called, that they use. So as long as you have an ABA, you can send it there.
Yeah.
So, different kettle of fish. I looked at some of these other guys. I looked at Current. They have a couple of things that they have compared to a Chime. They have cash back with a loyalty program. So you get like 15 points in terms of building up this cash back balance if you buy with certain retailers. They also have the paid early option. They have the fee-free overdraft, only $100 compared to Chime's $200. They have teen banking, and it just felt like a bit of a cooler brand. And who am I to say that, right? Old guy. But the Current compared to Chime, I kind of had a feel for, okay, if I were, in the US, I would think Current probably looks a bit cooler than Chime. Yeah. The other one, Dave, I didn't look at.
Dave started off as an overdraft product, which actually is an entirely separate conversation, whereby you're now starting to see a lot of pressure from customers on US banks and having to reduce their overdraft fees or get rid of them altogether because the challenger banks don't have them. So that will have a massive dent in the bottom line for some banks.
Totally. I know. It's but I'm thinking about, what do you think is the timeline for all of this to become a problem? Is it 5 years? Is it 10 years?
We might say, okay, it's not making a dent in the bottom line, but surely at a certain point, the age profile of customers flips.
Yeah.
And when is that? Maybe in the next 10 years. It really, how much is, like, what's happened? It's been really in the last maybe 2 to 3 years that Revolut have obviously built up their numbers, and a lot of these companies have launched and built up their numbers. But it's probably still it could be another 10 years before the big bank starts to feel it in terms of their age profile.
Yeah, I heard Peter McCormick speaking about Bitcoin adoption or crypto adoption in the same light, is that there's going to be a critical mass where once we hit that it's just going to move very quickly. And I think the same thing is going to happen with deposit displacement here from the big banks.
Because actually, I was talking to a company last week. They're a customer of a client of mine, and my company does kind of an investment platform for people who want to manage their own investments. These guys are like a private pension, or they manage private pensions. And he was saying that since 2010, so the last 10 years, they've seen the percentage of people in the Irish market who self-manage their own pension funds go from about 3% now to 15%, which is pretty large from an Irish context, and obviously we'd be behind what would be going on in the US, but that's a pretty big jump. That's a 5x jump in 10 years. So, you could see how quickly you add another 5 years to that and it'll probably be closer to 50%.
Oh yeah, I'm one of them. And it's like, it's not that hard. And once you kind of figure out, because a financial advisor can set up what's called for you here in Ireland an individual retirement bond, and you can roll your pension into that. And you can then, depending upon your risk profile, you can then elect to make your own investment decisions. So, it's a really easy way to do it. You get a great selection of ETFs. You can go pick the low fee products. There's a very simple formula there for how you look at this. So I'm just waiting for my provider to start offering crypto, but I think I'm going to be waiting till the day I die for my provider to do that. So I do that in other ways.
I think, in the next 10 years, you could see that just profile of customers is going to change from a big bank point of view. And maybe they'll start seeing that happen sooner. And that's why we'll see some of these acquisitions.
But what happens to the banking model when that happens? Where there's no longer as many checking account deposits to lend out. The whole core banking model.
Yeah, it's going to be a massive impact.
There's going to be a point in time where capital requirements of 10 to 12% of your deposits, whatever, that you need to maintain and have on hand, and you can loan out the rest. But at what point is that rest just not going to be enough to make money? Because everyone else around the world, the tipping point of the majority of consumers have figured out that, listen, there's a better way for me to manage my money. Yeah, we're getting very philosophical here. We need Sam Bankman-Fried on from this. He's like, someone referred to him, he's the CEO of FTX. Someone referred to him as he has the mind of a 18th century philosopher at the age of 27, and he's a billionaire already. So just to wrap that up, Bank of America losing their grip, I think we'll continue to see that grip being loosened over time.
And it does raise a very valid question. How do they get it back then? Or do they start having to chase deposits then? And where do you go to get that?
Well, it's this whole fintech battlefield concept that, you start out at the lower end of the battlefield where you end up, and that's an 11FS concept. I will obviously give them credit for that. And you start out at this lower end of the battlefield where you've got a high number of customers and a low value of deposits. Yeah. And that's retail banking. And then you start to move up the battlefield. Okay. And the very top of the battlefield is where you've got a small number of customers and a high value of deposits. So governments and big institutions. So moving up from retail, you've got mass affluent, you've got high net worth individuals, you've got SMEs that are in there, probably below, obviously, high net worth individuals. You've got mid-sized corporates, you've got big corporates, and then you're moving up the institution. So the big banks are going to dominate for a long time those institutional accounts. So we'll probably see some consolidation at the big bank level because it just won't make sense for there to be that many different options anymore. And then what will happen is that as the technology curve continues to move, we will see more adoption of technology-focused financial services, i.e. fintech, at the higher end of the battlefield, right? Moving up to the corporates. Starling being an excellent example is that they've moved up that battlefield to SMEs, right? I'd love to see where they're going to go next with that. So I think that's what we're going to see over time with this, is that the big banks consolidating, servicing big institutions and governments until the point comes where, there is a big, smart, secure technology solution for holding deposits at the institutional level, which may be central bank digital currency. But, I won't get into that tonight.
Cool.
Anywho, listen, one of the piece of news that came up this week was from the Financial Brand, and they wrote a piece on, will Facebook's Relaunch digital wallet alter the future of payments? And there's been so much controversy or bad press around Facebook. They started out as Libra with the Calibra wallet and then changed to DM, and now the wallet's being referred to as Novi. They were going to do this global mix of currencies as a cryptocurrency called DM, and now they're just pegging it to the US dollar, I think. They concluded their process, or stopped their process to try to get approved in Switzerland with their FINRA license, and they're now just focusing on the US market. So I wrote a blog about this 2 years ago when this was first announced. I didn't think much of it.
Yeah.
I still think, we got PayPal. We've got other ways to do this. Would you likely use Facebook's native digital currency to pay for something that you saw on Facebook that you wanted? Perhaps, but I don't think this is going to be a tectonic shift.
No, but if you remember when we talked about their WhatsApp payments, monetizing your existing customer base, why was WhatsApp rolling out payments a smart move in the likes of India? Well, they've 400 million customers or users of WhatsApp there. Automatically they're rolling out something that everyone can use, and it's just the ease of use within an existing solution, product that they already use. What are Facebook doing here? Providing the opportunity for their 3 billion customers to make payments within Facebook. I think it's, you'd have to assume it'll do reasonably well irrespective.
Yeah, you don't need to call it crypto. You don't need to call it digital
You don't
anything.
need to call it anything. It's just a payment solution within Facebook. And then you add in like Facebook marketplaces. And to your example, the ability for me to go onto Facebook, see something that I want to buy, and then pay for it within Facebook. We're in a situation, or we live in a world now where people have multiple wallets, effectively, multiple accounts, in the same way that we have different bank cards. People will still use their PayPal for a certain thing. They might end up using Facebook for this thing. They might use WhatsApp for another thing. They'll have a Revolut. So
Yeah.
even if a small portion of 3 billion people use it on a regular basis, it's still going to be a big business.
You could send a payment via WhatsApp that's coming out of your Novi wallet. You can receive payments back into that, and out of that Novi wallet, you can then move it somewhere else.
Two really interesting points. They're focused on the 1.7 billion unbanked people, 62 million Americans who are kind of stuck in the cash economy. The 3 billion customers are users of Facebook. That covers a lot of, people in remote parts of the world still use WhatsApp and they still use Facebook, even if they don't have a bank account.
Yep.
So you're bringing people into the financial services system, but in a very easy way for them to use it. And then, like I was just saying a minute ago, the connection within the ecosystem, they've 90 million businesses on their marketplace platform and 3 billion, obviously, customers who will be pre-authenticated because they're already set up with a Facebook account.
Yep. Okay. Now you're talking constructively, getting me thinking, which is a good thing. And I thought about this when I read it, is Pipit, Ollie Walsh, who we've had on the show a few times, and that where they digitalize cash, and you can take your currency and through a retail outlet, you could convert that technically into value, into digital cash, into a digital balance that you can then move across borders. Yep. And it would be great to see Pipit connected to the Novi wallet. So you could just currency in to your Novi wallet through Pipit. And that would be wonderful to see. I'm sure Ollie's already thinking about this. I think it's come up before. But, I'm going to see him in Galway, the Portershed, on the 10th of September. So I'll bring it up then.
Yeah, brilliant. And even the ability for them to be able to offer, obviously, further financial services products, because they announced in August that they're teaming up with an online lender in India to provide small business loans to Indian businesses. In some ways, it's a no-brainer by being able to just partner up with these guys to bring these products within the wallet.
I would like to see a Shopify do something like this.
Yeah,
right.
Yeah, absolutely.
That's where you start getting this consumer to business bridge. Now, plenty of businesses on Facebook, plenty of consumers on Facebook. So, they could be off to the races there. And I think it's a great point that you kind of got me thinking about, is that it doesn't need to be called crypto. It doesn't need to be called digital. It's just a way to exchange value, and people look at it as sending a specific currency.
Exactly. What are we talking about? We're effectively just talking about a currency solution. I'm not even half as qualified or as kind of up to speed as you would be on a lot of the stuff in the crypto space. When I used to describe a client that we both know of, I used to just say that what they were doing with their kind of digital identity was just like a digital Tesco club card. And that's kind of how I describe it to people, because ultimately, what is it? It's you're building up value on something to use within a location. In this scenario, whatever they want to call their currency, whatever, it's just being able to be used within a closed ecosystem.
But I think the point is you can bring it outside. And that's the differentiator here. That's what makes it different than e-money, right? In that I'm working with somebody right now who have figured out that what they are operating on an enterprise blockchain is technically being classified as e-money.
Yeah.
And it is because it's used in a closed loop, and it's something that represents currency or value due back to somebody, and you're holding it on their behalf, and you're safekeeping it in a safeguarding account. With Facebook here, with their currency, that this is something that can be brought outside the network. So I think once it's in the network, it's technically e-money. When it's outside the network, that's where it's digital money. That's where it's crypto. So yeah, it's going to be interesting to see how this one unfolds as well.
Yeah.
On that same note, this came out at the end of July. We didn't mention this, but I think it was worth mentioning because this came up on the Crypto 2.0 Signal channel that I'm on with Crypto Baz. He knows who he is. Shout out to him. And the guys down there in Southeast Asia, and where it was beyond the rumors, Amazon's likely direction in crypto. And this was an American banker on the 30th of July. And this was just a piece that was looking at, well, Amazon have a couple of pretty senior job descriptions out there where they're clearly hiring somebody for their crypto lead, for their blockchain lead. And I started thinking about this after one of the guys posted this up in the Signal chat and said, well, what's going to be the impact of this? I said, wait a second. Okay, if you think about what this could do for Amazon, if they no longer needed to use the credit card and debit card networks in order to accept payments, because they were able to just accept digital money in the same exact vein that we're just talking about with Facebook here, where you can send money to a merchant probably directly. It doesn't need to go to Amazon, and you can buy directly from them, from a third party. You can buy directly from Amazon themselves for all of their product that they ship, and you could just do that immediately without going through a credit card network. And if you look at what Amazon are doing in 2020, they had $200 billion in revenue from their online store sales, and they're expected to surpass that in 2021. So let's just say they hit 200 billion again. They're going to hit more, but say they hit it again. About half of their revenue is from core e-commerce, right? So that 200 billion is, half of the 400 billion overall. Every single time someone uses a Visa or MasterCard, Amazon get hit with a 3% charge, right? And that is just from the whole merchant acquiring system and so on and so forth. So say 75% of Amazon sales are done this way, say 25% are done through alternative payment mechanisms that are off the credit card. So that 3% of their 75% of their 200 billion is about $4.5 billion per year. Yeah. So if
huge.
Amazon can get off their dependence on credit card and debit cards, and I know they've had battles with Visa over the years about the ridiculousness of their charges. So I may be overinflating this 3%. They may have a special deal with Visa now where they brought them down a bit, but that's a lot of money, $4.5 billion a year directly to the bottom line from moving to alternative payment mechanisms. Right. So I think there is a story there that's going to be interesting, but that's going to take a while to unfold. That being said, spoke with some guys this morning in the UK who are really focused on open banking in the UK and are really focused on providing services to merchants to enable them to take part in the open banking transaction flow. And so that payments can be made in e-commerce without credit cards. It's just done by hooking into these open banking utilities to enable account-to-account transfers and doing it very simply. And I talked to them about this $4.5 billion at Amazon. They're like, that's exactly the problem that we're trying to solve here, is that you remove the reins that merchants have on them from the whole credit card ecosystem, the whole debit card ecosystem. So I'd love to see this go. I'd love to see it work.
Strange. I suppose the only thing I found strange about it was that it's a surprise it hasn't, or nothing like that has been happening sooner. Like, we just discussed Facebook and what they're doing. We've discussed other examples, like including Square. Strange that Amazon haven't tried prior to now to roll out their own kind of solution or wallet or whatever.
Well, reading that book, The Everything Store by Brad Stone, which I feel like I'm referring to a lot lately. Amazon focus their projects on things they know that are going to save money right away, right? And they know that the world is not yet ready to step away from their credit cards and their debit card. Maybe in Malaysia, because the whole credit card, debit card system is just a sham down there. But, it's...
But surely like a preloaded kind of wallet whereby I'm using my credit card once to top up my account.
Well, they may then drive people away because you want a very simple way. The best thing about Amazon is that one-click buy.
Yeah, of course.
Right. I signed up for Prime recently and forgot to cancel it. And then we got the Amazon Prime Video. And my wife is like, why do we still have this? It's great, but why do we still have this? I'm like, I think the trial period's not over yet, but I think we're actually paying for it.
Yeah.
But because packages started turning up at my house within, a day or two, I'm like, what the hell? This is great. And then my wife was like, well, when you're buying from Amazon, you're not buying Irish. I'm like, but it's so easy. I need the cello tape, which is Scotch tape for Americans, right? And it's just delivered tomorrow. It's like you asked for something and there it is. Yep. It's fantastic. And she's like, but you're not buying Irish. I'm like, well, even if I'm buying Irish, it's coming from China anyways. Who cares? Anyway, I think that this is going to be something that we're going to have to watch for a while as well. Yep. This is going to be a long burn for Amazon. And if this is something that Amazon are considering to completely transform the whole payment mechanism for their business, and considering how big Amazon now are worldwide, this would have a huge impact on everything. If they went this way, everyone's going to go this way. And you've got people coming out with different statements because when you do this, Owen, you're just one step closer to central bank digital currency. And that's where it just becomes a no-brainer to do that. And you've got folks, in very senior positions in different countries saying, well, digital currencies solve no problems for us. What is the problem that digital currencies solve? People are happy with the way the system works today. I'm like, it's extremely inefficient. There's so much wastage. There's so much ridiculous spending. The whole fact that the interchange, the interchange level in the US of 2% or whatever it is, 1.7 to 2%, that you get offered all these loyalty programs just because of this amount of money that merchants are throwing away. Yep. It's absolutely ridiculous. But I think they are. I think there's much bigger problems in the world than, Amazon making another $4.5 billion or not. But yeah, I digress. You had one other one that you wanted to mention about Lending Club, yeah?
Yeah, so I've always been paid more than a passing interest to Lending Club. It was one of the most kind of high profile peer-to-peer businesses back in the day. So, and actually they fully abandoned being any sort of peer-to-peer lender back in December last year. But this was an interview with the CEO. It was on August 16th, on the Protocol website. I just found it fascinating because early last year, they made an acquisition of Radius Bank, $185 million. So they were the first fintech to acquire a regulated bank. And at the time, their stock dropped by 2/3 of its value. So that was in February 2020. The stock kind of fell off a cliff. Wall Street in general didn't think much of that as an acquisition and the business and where it was going. And then they had their Q2 earnings results there at the end of July, whenever the end of Q2 is, can't remember now.
End of June.
End of June, that was it.
If you're going by this calendar, but there are other alternative calendars that you may elect to go by.
Well, they only reported them 2 weeks ago, so
it takes a couple of weeks to get those.
Yeah.
Anyway, get those debits and credits done.
So they announced a profit, which kind of surprised the market. Shares went up 50%, but actually the stock itself is up 500% from mid 2020. And the interesting thing about the interview was that the CEO is pretty much pinning a lot of the benefit and the uplift on the acquisition of the bank. So, which is an interesting play because typically we'd generally always be able to view that a fintech isn't going to, or the Stripes and the Squares and stuff, they're not going to go down the fully licensed route because of all of what it's going to bring to the table from a compliance and the regulatory costs and everything. Whereas in this scenario, Lending Club used to have to warehouse their loans, so they were fully funded by their investors. So they had $1 billion worth of loans that they were at a funding cost of 330 basis points. So because they acquired the bank, they were able to swap it for deposits, and they brought it down to 30 basis points.
Okay,
that's huge. And then they used to have to work with partner banks to issue the loans, and there was going to be a fee on top of that. And then that would have cost them, or that added probably about $30 million worth of revenue to the bottom line by being able to issue the loans out themselves. And then obviously interest income, they now keep about 25% of the loans they originate, and they're able to generate the income stream on the back of that. So they said their interest income went from 19 million in Q1 to 46 million in Q2. Acquiring the bank has saved them money and generated income.
Well, I'm thinking back to Chime, right? Yeah. And is this perhaps a suitable match? I'm sure Chime are paying through the nose for the services provided by the bank corp, as well as Stride, which is an Oklahoma bank, which is just okay, fine, have a bank anywhere. The fact they ended up with Stride is for a San Francisco bank is interesting. But I was thinking if there is a nice crossover point there, that could be interesting.
Yeah,
because you open up a whole new audience there.
Like the Lending Club were saying, their acquisition at Radius brought them in another 3.5 million customers. So to follow your line of thinking, being able to take on the likes of a Chime and it's 20 million customers, it'd be a big price to pay, but yet you're being able to roll out your banking offerings to all of these customers then.
Or Lending Club a public company?
Yeah.
Yeah. Well, it may go the other way. Maybe Chime, or the dictator himself, Chime, rolls up with a SPAC and buys Duo.
Sticks them together, yeah. Yeah, so I said, whilst they do talk about, they actually sell the regulatory scrutiny as a benefit. It's inspired confidence on the other side, because I think he was saying they had to go through 48 separate bank exams for them in terms of complying with different acts for all the different states that they were operating in.
Wow.
But at the same time, that generates a huge amount of credibility then and kind of confidence from investors and customers and everything else. Yeah, add that to the fact that they added customers, significantly reduced their cost of funds and everything. And it seems like a very strong move for them. That's obviously why they're up 500%.
Any involvement from a Reddit group?
Not that I'm aware of, no.
It's one to look at. It's one that I hadn't been following, and now you've got me intrigued. So this is going to be one that I dig into.
Yeah, well,
see what their flywheel might be.
consumer lending in general is just something I have some experience in the past, obviously from Future Finance, and I'm just fascinated by it and have always been. So any of these that pop up, I always kind of look at them a bit closer on the lending side.
On their website, the thing that pops up when you go, what flashes up on screen is personal loans up to $40,000.
Yeah.
Right. So that's going to be probably check your rate. It won't impact your credit score. How much do you need? What's the money for?
Yeah.
Refinance my credit cards, consolidate my debt, improve my home, refinance my car, purchase a home, blah, 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 blah. So I don't see that as being demographic specific.
No.
Right. So anybody that may need a loan to pay for a vacation, right? Or to pay to move or relocate or to purchase a home, which is obviously an everyday task, refinance my car, that is demographic neutral. So if you can get better rates from Lending Club than you could from a bank for doing that, then why not? That's one to look at. I will dig in.
Take it.
Alerting me to that, educational and inspiring at the same time. Thank you. I had a couple other things. I'm not going to go through them though. We talked about, we already said Walmart is looking for a crypto product lead.
Yeah.
Oh, Jesus. No, this was a good one to mention, and I will mention it. Shout out to Lex Sokolin. I don't know him, but I know a guy who used to work for him, and he thinks he's brilliant.
Yeah.
And he is the writer of the FinTech Blueprint newsletter. And this week's post was creating, transacting, and storing value in the financial metaverse of NFTs, DAOs, decentralized autonomous organizations, and DeFi, or decentralized finance. So he was saying that, listen, if you want to think about the world of finance, think of it as you're staring into a universe of wormholes. And you're going to pick 3 wormholes. And in the first wormhole, in the first world of finance, time ticks linearly. In the second world of fintech, we go 10x the speed of the old machines. In the third world of crypto, ideation, invention, and evolution disappear instantly into the event horizon of the singularity. I'm like, dude, this is very deep. And he's an everyday guy that I guess you can have a good conversation with. He just has a way with words that is just masterful.
Absolutely.
And going further into how he said that there's some truly strange things going on in 2021. We say this constantly and try to find the right words to explain it. Yet every week it feels that we're at some precipice. It does feel like that in this Web3 space right now.
Yep.
Crypto, NFTs, DeFi. Like something has been unleashed that almost nobody else can see, but is profoundly reformatting the nature of the world. The tentacles flash into view occasionally, but we mistake them for shadows or even worse, hallucinations of the insane. I'm like, dude, this is good stuff. And it made me want to read a really deep, thick analysis on this space. It is completely fascinating. It is really, really hard to keep up with all this, Owen, and you can't try. You cannot try to keep up with it. Because
I don't even pretend to.
It's like an iceberg. It's like a glacier in New Zealand that I climbed once, and where the guide was like, listen, we don't know which way to go because every day this glacier moves. And the trail that we took yesterday to guide people through that is gone. And we take people through a new one every day, even though it's the same. This whole space is just like that because it's changing all the time from one week to the next. And it's not changing. And where there are some hype cycles with this in this space, but it's really one thing building on top of the other and moving on and moving on and moving on and building out iterations from that. It's a fascinating space, and there's a lot more to get your head around there. A lot more for me to get my head around there.
Yeah.
But anyway, that was my last point of the evening was deep thoughts.
Brilliant.
Anything else from you?
No, that's it. Settled back into work and flat out on a few things, but good stuff to be working on. Some interesting clients.
Absolutely. Yeah, I'm looking forward to just getting out of the home office and getting to Galway the week after next. I got another 10 days to go. Well, 2 weeks to go before I'm there. But just to get out, see some folks in person, more than one at a time, right?
Yeah.
Get the ideas flowing. So looking forward to that. Shout out to the Porter Shed in Galway. Great place. All right. Cool. Well, we'll leave it there for this evening. Owen,
pleasure.
You have
always.
A good one.
You too.
Adios. That does it for this week, folks. And you can learn more about the stories we covered in the show notes on our website, moneyneversleeps.ie. So check us out online and subscribe to our Money Never Sleeps newsletter as well. If you like what you heard, we would sincerely appreciate a 5-star review on Apple Podcasts or whatever platform you're listening on, as it helps others to find the show. And remember, Money Never Sleeps is spelled as all one word. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm the founding partner at Nora Ventures, and I'm an early stage startup advisor and investor helping fintech and digital asset startups get their product to market, build traction with customers, and raise funding. If you'd like to talk to me about your business, get in touch at pete@norioventures.com. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.